overseas. Let's discuss the stew with Gus Faucher, chief economist at PNC. Gus, welcome. Good to have you with us. You know, if we went back a year ago, many analysts, I don't know about you, were saying, well, it's probably, we're not going to go into recession now or soon, but maybe second half of 23. Now most people are saying 24 if we have a recession at all. Where are you on this recession, no recession in 24 question?
I think the most likely outcome is we do get a mild recession starting around the middle of 2024. There's no question, but the labor market has been stronger than we were expecting, that household spending has held up better than we were expecting. But we do continue to feel the drag from higher interest rates. I think we'll feel more of that over the next 6-9 months or so. And so given the inversion in the yield curve, given the fact that we have not felt the full impact yet of Fed tightening, I do think that we will see that mild recession starting sometime around the middle of next year.
So does that suggest to you, does the fact that you and many others see sort of the same thing, and that many people attribute the probability of a recession to what the Fed has done and as the higher rates ripple through the economy, does that suggest to you that maybe the Fed is done?
It certainly does suggest that the Fed is done. I would not be surprised at all if that we do not see the Fed tighten again. Between the meeting that we get tomorrow and then the next one in mid-December, we'll have 2 more jobs reports. We'll give an indication of how the labor market is. We'll get a sense of how consumer spending is doing in the fourth quarter. And I think all of that together will suggest that inflation is slowing towards 2%, that the economy is softening, and that means that the Fed does not need to raise rates again.
Gus, that's sort of what I was wondering was inflation. As you bring that up, obviously, we're still well higher than the intended target. Do we need a recession to get inflation closer to 2%? If the Fed is done, if they don't do anything else, how's it going to get lower?
Just a softer labor market than not an outright contraction. I think there's still about a 40% probability that we get a soft landing where economic growth slows substantially, but we don't get an outright contraction in the economy. That would still mean a higher unemployment rate getting up to around 4% or so. And that could cool off inflationary pressures enough to bring inflation down to 2% without a recession. That being said, I think the more likely outcome is, given all of the tightening that we've experienced, does lead to that mild recession sometime next year.
Since the last meeting, of course, the war between Israel and Hamas has occurred. Does that add to the likelihood that the Fed stays put and pauses or maybe is done?
In the near term, yes. I think that obviously there's more uncertainty out there and that is a reason for the Fed to pause. However, if we do see a wider conflict in the Middle East, if energy prices move higher, and in particular, if we start to see energy inflation bleed into core inflation, that is inflation excluding food and energy, then I think the Fed may need to raise rates again in response to that. So the key question is what happens to energy prices because of the Middle East? What happens to core inflation because of the Middle East? And if we do start to see additional inflationary pressures, then the Fed may need to raise rates again, and that just increases the likelihood that we get a recession.